What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. All these videos are free for you guys. I don't have a Patreon account. I don't believe in charging people, so I just post videos for you guys. I am not a financial advisor, but I love posting videos on my stock portfolio or my dividend stock portfolio. I'm going to go over some stocks that are pretty hot in the market. When the pandemic hit, like the financial sector and the real estate sector took a huge hit. So these are some stocks that you might want to capitalize on. They have a pretty decent dividend yield. They're not bad stocks to day trade, and they're just going back up to where they were. So these are stocks that you need to capitalize on. And I'm always going to go over a wild card stock at the end, so don't worry about that, because I always add an extra one for you guys, because I just think that's one that was on my mind or I'm keeping an eye on. These are some good stocks. Some of them are cheap. Some of them are coming back with a vengeance. So you got to capitalize on them. So let's check these stocks out. That first stock is Keycorp. I actually am a member of KeyBank or Keycorp. And these guys are obviously a bank. They're in the financial sector. And, you know, I got a pretty good deal with them on a car loan. I'm not going to lie. You know, I love Toyotas. You know, living below my means. I'm not going to buy an expensive car when I can throw it in the stock market. But anyways, Keycorp is a nice bank stock. Now, if you look at when the pandemic hit, they took a huge nosedive. They're actually in line with the S&P for the past few years, and they're coming back. They're making a huge comeback, and they're starting to catch up with the S&P, which is attractive, especially if you're a day trader or if you're looking at it having a traditional Roth IRA. Now, again, what I explain about banks is, okay, when that, let's go back to 2009 when everything went down the tubes. Look at this, when I capitalized on these guys when they were a little bit down. But anyways, they, if you're a bank, how can you do something stupid to really screw up? Nowadays, I mean, they have these cashback cards. They have all these cards. And think about this too with banks. They're lending loans out for houses. People are buying houses like crazy. I mean, I'm not even wasting my time looking for a house, because if I put a bid on, like, let's just say $100,000 house, people are going to outbid me probably by $150,000. So I don't think it's good. Me personally, I'm not a real estate expert, but you know, everybody's buying like crazy. And right now, I mean, they're lending out loans like crazy to everyone. Car loans, student, you know, for loans for businesses. But the biggest thing about these guys is your credit card. Every time you swipe your credit card at the store or gas station, guess what? These guys get some money, because that's part of the rules. If you get to use my card, you know, I get something back. So they generate money from people swiping cards. Look at how many people go to the gas station a day, or they go to the vending machine or anything. They make money from you swiping. Of course, if you don't make your payments on time, they also make money on your interest. That's kind of what they're banking, bank, but that's what they want to bank on you for, is you're not making your payments on time, so they're making a profit from you. But let's think about this. If you're making your payments on time, they're still making money. So it's still a win-win situation. So I joke around with people at the bank, and they're like, well, man, will you make your payments on time? Your credit score is great. I go, well, you're still getting money off. You know, I'm still generating you money every time I go to the store. And they just laugh. They go, well, that is true. So that's one thing. Let me show you its dividend history real quick. What I like about this stock, it's a very popular stock in Ohio. It's a small stock. It's about, you know, right in the 20s. So, you know, it's not too bad as a dividend stock, or is a stock to trade. If you saw the past few years, it's done well against the S&P. That's traditional and Roth IRA material, if you ask me. But again, you know, when there's a nosedive with the pandemic or something, man, these guys take a huge hit. Well, let's check out his dividend history. Okay, not bad. 7 cents, 8 cents, 9 cents, 10 cents, 17 cents, 18.5. So that's not bad at all. I have these guys in my E-Trade dividend portfolio. I am long on KeyBank. 3.21% is not bad. A PE ratio of 13.02, and annual dividend 74 cents. wow, I buy one, I get 74 cents. Not bad, but obviously if you buy more shares, compound interest kicks in. So that's pretty attractive, if you ask me. When, we always say buy the dip. I capitalized on these guys when they took a huge nosedive with the pandemic. So, anytime, I always tell people my strategy is I always have $1,000 to $2,000 ready, like the strike money. Not when you do it right away, but man, when stuff takes a hit, you boom, put some you strike. You're like a lion. You see it spot its prey, man. You go in for the kill. Just like, when these guys take a nosedive, I'm telling you, I apologize, I got cut off somehow. But so when things, when certain sectors, real estate and the financial sector take a big hit, you got to have some money to pound it in. Like I was saying, like be a lion. You got to go in for the kill and capitalize on the opportunity because it's going to go right back up eventually. So let's check out this next dividend stock. Oh, and before I even do anything, don't forget, Keycorp does have a stock split history in 1992, 1988, 1994. So, I doubt that it's going to split its stock, right around this time, because one, the pandemic, and two, the recession. So it's slowly getting back up there. But that would be nice if it does. But I'm just showing you that it's not there yet. So I wouldn't anticipate a split stock or a stock split. I'm sorry, can't even talk. So that's kind of what I'm seeing with KeyBank. I really like it with the dividend yield. I think it's a very good company. It's very hard for banks to not do well. I'd be very surprised if a bank went out of business. Now I can see them getting bought off by another bank, but I don't see, somebody like KeyBank going out of business. Let's check out the next stock. Okay, the next stock would be Stor Capital. This is a quarterly dividend real estate investment trust that is a Buffett stock. Okay, he has owned Stor Capital. Past 5 years, it was neck and neck with the S&P, but when that pandemic hit, it took a huge nosedive. So it's time to capitalize on this stock. Let's check and see the highest it ever was. It was right at $39. Let's check the past 5 years. Let's just find it. Right around $39, $40, right around that range. So you got to capitalize on it now because it's pretty cheap. But the thing that's very attractive about it is, I'll go into detail, is its model and its setup and its dividend history. So let's check out what this rate is about. Because I always tell people, if I invest in a rate, what am I getting out of this rate? Is it, what is it all about? So you need to look into rates and look on their websites before you make the call. So I encourage all you guys who watch my videos, if you're looking at a real estate investment trust, look at their website, look at their diversification, look at what their capabilities are before you pull the trigger on the stock and buy it. So I like to refer to Motley Fool on a lot of decisions I like to make before I end up, buying stocks. So they're a pretty good reference, and I always discuss these guys way in the beginning. So these guys are basically single tenant net lease real estate, mostly in the service and retail industries. So this is one thing. In the end of third quarter, Stor Capital owned 2,587 properties throughout the United States, leased to 511 different tenants. The company looks for specific types of properties to acquire, specifically middle market properties occupied by single tenants. To put them in the middle market into perspective, most of Stor's tenants are companies with $20 million to $500 million in annual revenue. So we're taking mostly not huge companies, but small independent businesses either. So, okay, here we go. This is what I like. This is what you need to know when you invest in rates. Stor Capital also invests in retailers, about 19% of rent, manufacturing properties, furniture stores, farm supply, vehicle dealerships, and some of the major retail tenant types. So this is very interesting. And now here's another interesting thing, okay? No more than 2.7 of stores rental income comes from any one tenant. Just to name examples, top tenants of the portfolio include Fleet Farm, Bass Pro Shops, Camping World, and AMC Theaters. Wait a second. Oh, wait, isn't AMC starting back up again? Let's see. People are getting vaccinated. I own EPR properties. Gee, I think they know what they're doing. So things are starting to open back up. Okay, this is something that you need to capitalize on before it's too late. Like I'm telling you guys, the REIT sector, financial sector, they're starting to make a comeback, and you got to capitalize on them before it's too late. I know I did. I'm very happy with my results. Let's check out STOR's dividend history. Okay, first off, 25, 27, 29, 31, 33, 35, 36. Dividend yield of 4.23%, PE ratio of 43.49, annual dividend $1.44. Now we're talking, okay? I like my 3 to 5% dividend yield range on my rates, and STOR Capital is right within my range. And Warren Buffett owns STOR Capital. So that's something that's very attractive to me. Now, I don't agree with everything on Warren Buffett because, he's not a fan of crypto, but guess what? I like what I see. So that's the thing that's really good. They own these really good shops, like I said. So the dividend yield's attractive. It's increasing its dividend rates. I mean, even during the pandemic, it was increasing its dividend and allowing its dividend to follow suit or follow through. So that's something that's very attractive about the stock. Now, my rate EPR Properties suspended its dividend. It has not distributed its dividend. I don't know if it will for a while. So we will see what happens with that one. But I definitely capitalize on that, and I'm just waiting for it to start distributing its dividend again. So let's check out the next stock. So that next stock would be Huntington Bank Shares. So I had this stock. This is a bank stock. It's actually a pretty big stock. And I apologize, by the way, my internet is it's doing terrible. It's like raining outside in Ohio. It's our pool is supposed to open like this weekend. I have to work though, but welcome to Ohio with the weather. It's like lagging my internet a little bit. But these guys are a very good stock. And like I said with KeyBank, look at all the times that they lend money out to people buying houses, businesses, okay? Your credit cards. Anytime you swipe your credit card, you got, they make money. And these guys are way down, okay? I capitalized on these guys when the pandemic hit, when they were $8.06, sold them through some rates. Now they're at $15.49. So this is something that has to be capitalized before it's too late. I mean, for $15.49, that is not a bad I was almost going to say rate, but a bad financial stock or a bank stock. So let me just show you its dividend history and what I mean. Oh, wait, before I even go to the dividend history, let's look at its stock split history. So that's one thing that's very attractive about this stock, is it has an extensive stock split history. Now, again, with KeyBank, I don't expect them to be up there right now, or the probability of them being a stock split company, because the pandemic and the recession that happened, they took a big nosedive. But this is what makes these guys attractive, is their dividend history, because they're so cheap as well. So let me just show you their dividend history. Look at this, 5, 6, 7, 8, 11, 14, 15, 3.84% dividend yield, PE ratio at 13.7, annual dividend. Looks like we are in business, 15, 30, 45, 60 right there, $15.49. You have an opportunity to really compound this with a stock that's increasing its dividend. I'm going to tell you something. These guys, once I get enough and I get satisfied enough with my sector, with the communication sector, I'm going to probably buy the stock, because one, it's cheap, it has increased its dividend over time, and as I always say, take it to the bank. They're going to make money. They're going to make money from loans. They're going to make money from your credit cards, whether you owe debt or you owe interest or you swipe your credit card. They're going to get money. They know what they're doing when it lends money, okay? And these people that, are not capitalizing on this, this is why I bought the stock and sold it. I made a great profit, and I'll probably rebuy it because it's so cheap. So it's right within my dividend yield range of 3 to 5% that I really like. If it's 6 or 7, you're a unicorn or something. You better be really good to be, you're not going to freeze your dividend or something, or you're not financially in trouble. But let's check out this final stock. I think this one is really interesting that somebody brought to my attention. It's a little on the expensive side, but it's a pretty good dividend stock. So let's check this one out. And that stock would be the Bank of Nova Scotia. Okay, we have a Canadian bank that is doing very well. Recently against the S&P, not too hot, but it's coming back. Okay, it's right around the $66 range. It was at one point, it was its peak? We're about 55, so it's catching up pretty quick with this pandemic just about being over. So, it was right at $38.65, but now all of a sudden it's coming back up with a vengeance. So now you got decisions to make. Are you going to get it before it starts jumping up like crazy, or are you going to just leave it alone and look at another dividend stock? So, sometimes you just don't have the opportunity to strike when you have the chance, or there's just so many good stocks out there. Let's check out its dividend history. Oh, even better, 60, 62, 64, 66, 50. Okay, it took a little bit of a hit. Up, up, up. It's at 70 right now, 70 cents. PE ratio 16.57, dividend yield of 4.29%, annual dividend of $2.82. Let's just say $2.82, and it's increasing its dividend. I like what I see. Things are looking very strong with this stock. So let me know what you think of this video. I went over some of the rates in the financial sector because you got to capitalize on this sector right now. Okay, it's starting to catch up. The pandemic is it's almost over, honestly. People are getting vaccinated. It's either you had the virus or you're getting vaccinated. So it's starting to go away. I think things are starting to get back to normal. Let me know what you think of this video. Do you like these stocks? Are you feeling it, not feeling it? Do you like the bank stocks? Do you like the financial stocks? Keep me posted. I'll see you in the comment section. You guys have a good one.